Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shell D'Souza as well. Shell, a very good afternoon to you as well. Market's a bit muted, nothing exciting, but as long as it's holding on about to that 19,400 levels, it's surely a one to watch out for. But absolutely, Nifty as of now flip-flopping between the red and the green through the day, keeping an eye out on what happens by the end of the day. Broader markets are something that has continued to outperform. Let's move on and actually pull up the stock price of Raymond and what is that doing in trade. They reported their numbers as well. And on the back of their numbers, today we're seeing a bit of a muted day coming in for Raymond as well. We are joined now by Mr. Amit Agarwal, Group CFO at Raymond. Thank you so much, Mr. Agarwal, for joining in with us this afternoon on ET Now. Let's talk about the numbers, because in an otherwise very muted customer demand environment and delayed festive season, you managed to deliver your highest ever revenue and EBITDA. Could you help us understand what's actually driving this growth and what is the trajectory in terms of the top line growth we should expect from the company in FY24 then?
I think it is very important to understand that Raymond, which is a very innovative company, keeps innovating its product design, and that helps us to get into the market with our newer products. What we have done in terms of the premiumization and casualization, and especially if you look at it, our branded apparel segment, where we have demonstrated a significant growth over last year to the tune of 18%. I think that is one very clear reflection that as a player, we have been able to bring new designs, premiumization, as well as if you see, we have opened new stores. And I think if we continue to open the new stores, that helps us in order to also get the penetration into the deeper into the market, which enables us to get into far higher revenue. Second thing, the whole important factor is that as soon as the whole Adhik Maas got ended and Pitru Paksh got ended, there was a big frenzy of activity which our dealers and franchisees were expecting very, very clearly. And that is why they had started to buy from us, because on the fabric side, we sell primary and to these dealers and franchisees, which helped in this business to get to the highest revenue. And let me also talk about the real estate business. We launched the second tower, the Address by GS Season 2 in the month of July. And on day one, we got 50 bookings for that apartments out of total of 200. So I think in this quarter also, we have seen a very, very strong growth in terms of our bookings. So I think overall, we are quite satisfied that the performance level, the revenues across our all businesses have done fairly well.
Right. Good afternoon, Mr. Agarwal. This is Cheryl also joining in the conversation and talk about the festive season. It is underway, and also you'll have the wedding season that will be soon upon us. How has the weak demand sentiment been? Have you seen some sort of a reversal in the weak demand sentiment that we were witnessing? And also after record FY23, are you on track for a record FY24?
I think it is, we believe at Raymond is first you demonstrate and then you talk about. And actually, very clearly, if you see once again this quarter delivering a record performance reflects that the ability of the company across all our businesses is to boost growth, both in terms of revenue and profitability. Look, in terms of our demand for the products, especially on the weekends, we have seen even the last weekend and the weekend before that, the sales have jumped up. If I take weekend to weekend, we have been tracking for the last 4 to 6 weeks. If you look the numbers, what used to be a growth seeing 30-35% over the weekend from one weekend to another weekend in the initial phase. So I think now we are seeing, like last weekend, we got a record sales in our TRS stores. I think that reflects there is a significant push in the market and the customers are willing to come forward and buy the products. And very clearly, the mood is such that the 8-9 months, people have been shying away from the retail market. Now they're coming into the retail market. The trigger is clearly the festival season and the wedding season. And you see the number of weddings which we are expecting is also phenomenal in this short period of 23-24 days. I think that buying has already started, because first it was the puja shopping and then reflected with little bit of Diwali shopping coupled with the wedding shopping. So I think we are seeing that traction. across our stores.
Right, there's one thing that is coming out in your margins, especially when you look at your margins excluding the other income. They come in, seems like they've come in under pressure. So what is it that is impacting the margins, and what is the outlook on the margins now going forward?
So look, in terms of the margin, I think it is not that there is under pressure, because what happens, as we will have proportion of the branded apparels and the garmenting segment, which is the export-led segment, which is going to grow, and we are on a build phase. We have to also understand, as we continue to open the stores all across the country for the retail footprint expansion, we don't take on our own. It is all franchisee-led. However, you need to put expenditure in terms of doing the retail marketing in that area. So that puts up the expenditure. You're putting more money on the branding. Second thing, in terms of the garmenting facility, if you look at it, what has happened, that as we have told you last time, that we are putting almost 19 lines, additional lines with a 200 crore of capex. We need to train our workforce. So at this juncture, we are training the workforce, which the cost goes into the P&L, but the output will come a little later. The third thing, on the real estate side, if you see, there's a margin reduction in the margin compared to the last year, because if you launch a project, you will have initially a lot of expenditure, marketing expenditure, in terms of putting the approval, some of the approval cost, which is like a one-time cost, which goes into the P&L. So those kind of cost hits when you launch a project. And as I mentioned, that in the month of July, we launched the project. So over the time, we are very clear that our demonstrated performance on the real estate side is in that 24-25%. However, in this quarter, because of the launch of the projects, the margin is lower. So on an average, these are the two major reasons which has led to a lower margin. But we are very confident that the circa 15% margin overall for the EBITDA for the business will be continued to manage and maintain that.
Right, Mr. Agarwal, you are evaluating various JVs as well as JDAs. That's the last time when we spoke to you. And indeed, since then, you have actually announced projects outside Thane. If you could tell us, what's the combined top-line potential of these projects, including your launches that you're seeing in Thane?
You see, we have launched almost 4.5 million square feet in Thane, and we have delivered almost 1 million square feet. So to that extent, it is a potential to the tune of 9,000 crore. It is current revenue from these projects is 9,000 crore. We still have almost 60 acres of land, which has a 16,000 crore of potential. So Thane alone would be a 25,000 crore potential. Now, as you rightly pointed out, that we have started to venture out on the JDA project. One we signed in the Bandra. The second one we have signed in the Mahim very recently, I think 10 days back. It is the Mahim project. So between these two projects, the projected revenue is somewhere in the range of 3,800 crores. And as we continue our journey, we have outlined again as a strategy that our target is that in the next 3 to 4 years, almost 40 to 50% of the revenue can come from Thane, 40 to 50% come from JDA projects, and the balance would come from Thane projects. So I think that is the whole strategy. We are working towards that, and you have seen that slowly and steadily we are progressing towards that. As we speak currently, if you take 9,000 current revenue potential and 3,700 crore from the two JDAs, we are closely reaching to those numbers.
Okay, thank you so much, Mr. Agarwal, for joining with us this afternoon on ET Now and talking about the company and a growth outlook for the company going forward. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with stocks and which stocks are buzzing in trade after this break. Welcome back, and you're watching Market Fatafat on ET Now. Let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, now we have Swati Hotkar joining in with us, while from the research team, we have Mamakshi as well as Aisha joining in with us. A very good afternoon to all of you all as well. And let me get started with the first stock that is in focus today. We're going to talk about Mankind Pharma. This one is in focus after we're seeing that as per IIFL, Mankind could actually get included in the FTSE GEIS quarterly index review. The announcement is expected on 17th of November, and the adjustment will actually take place on 15th of December. Now, the flows of 30 million is expected in Mankind Mankind Pharma because of this, and the stock to get added in all world and all cap index as well. So on the back of this, today Mankind Pharma was trading in the green. As of now, given up all those gains, down almost 0.4% in trade.
All right, that's Mankind Pharma for you. But moving on, Swati, Purvankara, how is this one looking on the charts?
Purvankara looks very positive on the technical setups because the stock is on the verge of giving the triple resistance levels, which comes at around 150 levels onwards. Also, the interesting pattern that it's on the verge of giving the breakout of the pennant pattern on the monthly chart. So it is a very great chart upside. I believe 170, 175 levels can be seen on the high side, whereas the support is placed at 135 levels. So those who are having any long position or want to opt for it, one can go for a long with a trailing stop loss of 135 for immediate target of 170.
Moving on, let's talk about SJS Enterprises. That particular counter actually fell approximately 5% at one point in time. Now the stock is trading at around 3.7% lower. It actually fell to the lowest levels in about 2 months. This after Ashish Kacholia offloaded about 1.6 lakh shares, which translates to 0.51% stake in the company at a price of around 653.22 rupees per share. This via block deals. Kacholia had Mr. Ashish Kacholia had held around 10 lakh shares in the company that aggregated to about 3.23% stake at the end of September quarter. So on back of this particular move coming in, you can see the stock is trading low by about 3.7% as we speak.
Let's move on and talk about Marksans Pharma. Then Swati on the charts. This one has been buzzing in trade in the last couple of sessions as well. And last 6 months managed to give almost a 60% return. Now at the current levels of 120, what is your view on Marksans Pharma? Is it time for a bit of a correction or the run-up is going to continue?
View on the technical side is really positive. The stock is trading nearby its all-time high, which comes to around 122 levels. I believe the stock is on the verge of giving a new all-time high, which comes to around 135 to 140 levels. The stock, it's trading in the upper tops, high bottom formation, rising channel, upward rising channel. So every technical setup is really positive on this particular counter. It's ready to give a new run up and it will hit the target of 135 to 140 levels. So one can take a long position at the CMP as well because its chart is looking really positive downside. It has a very good support of 110 levels supported by its 50 DMA. So one can hold their long positions for immediate target of 135 levels.
Vamakshi, coming to you, PFC, this particular counter, why is it in focus?
Numbers yesterday, and in fact after the numbers came in, the stock has actually hit an all-time high today. As of now, the stock is trading higher by almost 5%. Let's quickly look at the numbers then. Loan growth has come in much stronger than what the street was expecting. The loan book has actually managed to grow by over 19% on a year-on-year basis, and this was largely driven by the kind of momentum that they've seen as far as the disbursements are concerned. Disbursements are up almost 91% on a year-on-year basis, and in fact this momentum in turn is being driven by lending to discoms as well as the renewable energy projects. When we talk about their net interest margins, they've stayed rather steady at 3.4%. Net interest income has actually come off. It stayed slightly flattish at around 0.4% on a year-on-year basis, and low credit cost is what the company has reported, and that was mainly on account of improvement in the asset quality. But the net profit was also higher than what the street was expecting. In fact, Phillip Capital has also given a thumbs up to this counter. They maintain a buy rating, target price of 310 rupees per share. So all in all, a good set of numbers, and that is the reason why the stock is perched at an all-time high today.
Let's move on and talk about Aisha Motors on the technicals and charts. And Swati, this one has remained quite range bound on a YTD basis. When you look at it, remained at those levels from 3,000 to 3,500. What is the view now for Aisha Motors?
Yes, you have rightly pointed out that this particular stock got stuck within the range of 3,300 to 3,500 level. Now this week we have seen a breakout with the very recent volumes. I believe that the stock has a potential to reach up to 3,700 levels on the high side because the RSI, the relative strength index, is also showing a positive crossover from the midways, and it's trending in the high tops, high bottom formation, not showing any kind of a trend reversal at the current market price. So the momentum is really positive. We are looking for upside of at least minimum 3,700 levels. So one can hold the long positions. Immediate support is placed at 3,450 levels. So one can go for a long position or hold the long position for 3,700 levels.
Let's talk about Bajaj Consumer, and this one actually reported its numbers, isn't it?
Yes, and just a couple of hours ago it reported its numbers and the stock is declining in trade. Remember, we saw that sharp downtick on the stock when it reported its numbers, and the loss in fact has intensified over the last couple of quarters. Now as we speak, it is down nearly 5.5%. On a year-on-year basis, numbers do look good, but sequentially numbers have deteriorated, and that is the reason the stock is reacting negatively. Revenues have come in at 235 crores in the quarter gone by versus 270 crores that the company had reported in the first quarter. Margins have also contracted to about 15.6% versus 18% that the company had reported in the previous quarter. So sequentially, very weak set of numbers is what the company has reported, and that is the reason the stock is declining in trade.
Surely keeping an eye out on Bajaj Consumers. Let's move on and talk about Avon Tech. This one too is in focus on the back of its numbers. When you look at it, yes, a weak set of numbers reported by the company here as well. The revenues are down by around 18%, coming in at just 201 crore versus 245 crore last year. Profits of the company have halved as well, just at 7 crores versus 15 crores last year, down 50%. Looking at the operational performance, also clear weakness that is seen coming in terms of the operational performance of the company as well. And in terms of the EBITDA, at 13 crores, down almost 56%. Also the margins as 6.3% versus 11.7%, so contraction in terms of the margins of more than 500 basis points. So keeping an eye out on this. Let's keep it going then with another stock that is in focus, and that is Asian Paints on the back of technicals. And Swati, this one has been very, very dull in the last 1 year in terms of a return coming in for an investor. Now, what is the view on Asian Paints? Finally, can we expect an upward?
Yes, definitely. We have seen a lot of fall in this particular stock from almost 3,500 to levels up to 2,900, 2,800 levels. From there onwards, we have seen that the stock has shown some sort of a pullback rally. The previous week candle was a doji candle, which is a very strong reversal candle formation was there. So this week we have seen a very good kind of a positive momentum. Almost the stock is up by 4% on weekly basis. I believe that this momentum is likely to be carried forward for a short-term target of 3,400 to 3,500 levels. So one should keep the view positive on this particular counter, because we are likely to witness some sort of a reversal from the current market price, whereas the downside, the support is lies at 2950 levels. So the view is definitely positive on Asian Paints.
All right, moving on, let's talk about MTAR Tech then. And MTAR Tech is in focus on back of its profits falling actually in the quarter gone by. They've also gone ahead and cut the forecast as well. And as you can see it on your screen, the stock is down by 10%. At one point in time, it was down by 12.5% or so. The consolidated profit on a year-on-year basis definitely has seen a decline, while the total expenses saw an uptick of about 44.1%. But it is the FY24 revenue forecast that they've cut to 670 to 700 crore rupees from 830 to 860 crore rupees earlier. So downward revision coming in for FY24 guidance. They're saying that they've trimmed their forecast due to the deferment of shipment plans to the next fiscal year, and the stock, as you can see it on your screen, has snapped a 3-day gaining streak today.
Okay, that is MTAR Tech snapping its 3-day gaining streak. But let's move on, talk about Tata Motors. Swati, what are the charts indicating for Tata Motors?
Performing very well from the last few trading sessions. If you look towards the Tata Motors chart, the stock has given the formation of the flat pattern, but it got stuck within that pattern itself. The momentum indicators from the overbought zone is showing some kind of a divergence. So the view is little bit cautious in this particular counter, because the stock is got stuck within the range of 650 to 600 levels. So unless until it doesn't give a breakout on either side, the direction will not be a clear, or the trend will not be a clear for this particular counter. So my view is little bit cautious. I believe as long as this particular stock trades below 670 levels, the view will remain cautious, and we might see some downfall towards to 610, 600 levels on the downside. So one can be cautious at the current market price in Tata Motors.
That's your take coming on Tata Motors, Swati. But what about Aurobindo Pharma? What a rise this one has seen actually this year. Do you think this rise will continue for Aurobindo Pharma now?
Yes, the pharma sectors are really doing very well in this month as such. Already I have given a positive on the marks in pharma. This particular company is really doing well. Aurobindo Pharma is also giving a very strong pattern formations on the weekly and the monthly. The flat pattern, the sideways consolidation breakout has been given in this with a very good volumes. So the overall technical setup is definitely really positive, because from the last 4-5 trading session we are witnessing a very steep rally from almost 850 to 950 levels. I believe this pullback rally is likely to be continued towards to 1050 to 1100 levels. So the view is definitely positive. One should hold their long position as long as 900 levels has been intact. So to hold your long positions for immediate target of 1050 to 1100 levels on the higher side.
Okay, thank you so much for that, Swati. But on that note, we're going to sip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.